Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Let's take a look at payroll. At the end of a lesson, you should be able to define terms associated with payroll. And we're going to begin with the definition of payroll. What is payroll? It's a document of all a business's employees that shows details of wages or salaries paid to each individual and all these amounts were calculated. So basically it is showing you the list of employees and showing their wages or their salaries and how they arrive by that value that the employee received. Okay, so here we go with some key terms. And the first term that we're looking at is gross pay. Gross pay is our first term. And what is gross pay? That is the amount due to be paid by an employee in wages or salaries in return for work done before making any deduction. So gross pay is a pay that is calculated for an employee before all deductions are taken out. The next term is wages. What is wages? That is an amount that is paid weekly or bi-weekly to an employee. This can be paid by cash. So you will hear the term wages. Remember, this is a value that is paid to the employee weekly or bi-weekly. The other term is salaries. And again, yes, salary is pay, but this is the amount paid monthly, either by check or directly into the employee's bank account. So that is gross pay, wages, and salaries. We're going to look at some more terms, and we're going to continue with fixed rate. What does the term fixed rate mean? And that is pay that is an agreed amount for a period of time, for example, an annual salary. So you may say that the employee earned $1 million for the year. That is a fixed rate that the employee earns. Or it could be an amount for a specified month or period. Next term, time rate. And time rate is pay that is paid on the numbers of hours worked. If the person worked 10 hours, they get 10 hours pay. If they work 40 hours, they'll get 40 hours pay. Next is piece rate, and the piece rate refers to pay that is based on the work done in terms of products made, processes completed, etc. So if the person is working on a particular job, right, and they have completed only 200 items, they would get paid for the 200 items that they have completed. Next is commission. And you're used to commission, right? Because you might have gone to stores where when you go to the cashier, they ask you for the name of the person that assisted you. They're collecting that information because based on the amount of sales that the person did for the period, then they would be given a percentage of that value. Okay, so commission basically is pay that is dependent on a business's performance, often sales, and is expressed as a percentage of the performance indicator. So basically, you're getting paid based on the amount of work that you have done. A percentage of whatever sales that they have collected, you'll get that as commission. Next term is basic wage or salary. And this is the minimum pay for an employee's normal time or production according to the contract between the employer and the employee. Like, for example, a country may have the basic work hours for the week is 40 hours. So the pay that you get for those 40 hours work would be referred to as your basic wage or salary. Next term, overtime. And overtime, this is additional pay that an employee can earn by working extra hours. So earlier I mentioned the basic hours for the week of 40 hours. If it is that the employee worked 45 hours, the extra 5 hours is referred to as overtime hours. Or we could break it down into days. What if the basic hours work for the day is 8 hours? However, the employee had worked 12 hours for the day. The difference between that basic hours and the hours work would give you the overtime. Of course, that would be 8 from the 12 hours. Next, statutory deductions. So we have two types of deductions. We have statutory and we have voluntary deductions. So we're going to zero in on statutory deductions first. And these are compulsory and enforced by the government, for example, income tax and national insurance. So basically, these you must pay them by law. It's stipulated by law that out of your pay, whenever you work, you must pay these taxes, these deductions, right? Statutory deduction is also referred to as involuntary deduction. They are compulsory deductions. So they can refer to as involuntary or compulsory deductions. And we're going to continue by looking at the voluntary deductions, which are also known as non-statutory deductions. And these are made at the request of the employee. So for example, pension contribution, credit union shares or dues, trade union contribution. You might take out a loan to purchase a car, or probably one of those unsecured loans, or it could be a secured loan, and you ask your employer to take out that installment for you on a monthly basis or weekly basis and pay it on your behalf. That payment that is taken from your pay is voluntary deduction as well. Next term is net pay, and this is the amount of the employee actually receives after deductions have been made. So we have mentioned gross pay earlier, we have mentioned deductions. To get your net pay, that would be your gross pay or your wage minus your total deductions. The figure that you get after is referred to as net pay. Net pay is similar to take home pay. So you might hear some person saying that this is the pay that they take home. That is their net pay. So we're going to look at taxable pay. Taxable pay, and look out for this in your exam. So taxable pay is a portion of a person's gross income that the government deems subject to taxes. So this is what you must pay tax on, your income tax on, for example, right? So that is referred to as taxable pay. And we, of course, we have non-taxable pay, which is also referred to as income tax allowance or free pay. Non-taxable pay are wages given to an employee or individual without any taxes withheld. So no income tax will be charged on that value. So once they say income tax allowance, or you make it a question that say the first $1,000 or the first $20,000 is 0% tax, it means that that is the non-taxable pay. We're going to take a look at the final two terms. And the first one there is basic rate. And basic rate is a pay per hour for basic hours work. So you might work 40 hours for the week as your basic hours. The pay that you receive for each of those 40 hours is referred to as basic rate. So the question may say that the rate per hour is $20. So the $20 pay rate that you receive for each of those basic hours is referred to as basic rate. And the overtime rate is the pay per hour for overtime hours worked. And overtime can be paid at a time and a half or double the amount of the basic rate. We will look at preparing payroll sheet in another session. So that is it for the key terms that are associated with payroll.
Like, share, and don't forget to subscribe.